In the part 2 of part 4 of inventory IAS 2, we are going to discuss the exercises. Straight away we will enter into the questions, and this is the exercise 1. This is the exercise 2. In the exercise 2, they says the company has cost of inventory as at follows. Some a company has a consistent inventory as follows at cost, right? The company has costing closing stock inventory as follows. So we are welcoming to you to the this new lesson. Here we are discussing the exercises. Here one exercise and there is a second exercise. We will go for the second exercise where a company has closing stocks inventories as follows, right? They have a company has an closing stocks as at end of the year or end of the accounting period. They have listed item units, uh, cost per unit. This is cost per unit. This is estimated further cost to be incurred, right? Estimated cost, further cost to be incurred. This is the estimated final selling price, right? Product number A, they says they have 100 quantity at the rate of cost incurred 10, and estimated further processing cost is 3, and estimated selling price 5. B, they have 200 units at the rate of cost 12 rupees, and further processing cost involved is 5 rupees, and final selling price was 16. Product number C, they have 150 units at the rate of 6 rupees per cost per unit, and further processing cost involved is 4 rupees, and final selling price, estimated selling price is 11 rupees. The question is calculate the total value of inventory at the end of the period. Calculate the total value of the inventory at the end of the year. This is first, the standard says cost or estimate the cost for NRV value, net realizable value. Whichever is low, we have to adapt that. Here, if we take this product A, right? We will say product A, item products A, right? Product A, product A and B and C, right? Here cost per unit, they have given the cost per unit, right? We can calculate the cost per unit later on, right? Here selling price per unit, selling price is, estimated selling price is 15 and 16 and 11 rupees, right? At one glance we can do the workings for this particular question rather than going attempting for each and every product separately, right? All the products, for the costing for the all the products, we can do it at one glance. This is my way of working, right? This is selling price. After selling price, what the net realizable value, what they says, selling price minus conversion cost minus selling and distribution cost. So you have to identify the conversion cost. What is the conversion cost involved here? They say cost per estimated further cost to be incurred, that is the conversion cost, right? Estimated further cost, right, to be incurred, that is A is 3 rupees, B is 5 rupees, C is 4 rupees. So you have to see whether they have mentioned any what he called selling and distribution cost anywhere else. Nothing, they have not mentioned any selling and distribution cost. So net realizable, our net realizable value is how much? 15 minus 3, that is 12 rupees. For product A we had a net realizable value of 12. For the B, 16 minus 5, net realizable value we had 11, right? For the C, we had a net realizable value of 7 rupees per unit. 7 rupees per unit. Now, we can take the cost per unit. Cost per unit. That is given in the question. Cost per unit A is 10, B is 5, sorry, B is 12, and C is 6. 6. Okay. So we have arrived at net realizable value and cost per unit. Cost per unit they have given in the question. We did the working to get the net realizable value. We have got the net realizable value, right? This is the cost per unit. Now you have to say which one you have to select it, right? Which one you have to select it for the costing purposes. Here net realizable value, from these two only you are going to select, right? From these two, right? These from these two only you have to select the cost. The standard says, IS standard says, whichever is lower from net realizable value or cost. You can evaluate net realizable value or cost, whichever is lower. Here when you compare the uh, net realizable value and cost in for the product A, cost is lower, so we are going to value the product at the rate of 10 rupees, right? Inventory value, inventory value, inventory value, valuation, right? Right, here we are going to say product A, B and C. Cost per unit, cost per unit, right? Here cost per unit, but you can say units, closing units available on hand, right? Units available on hand, in hand, right? That is there. How much? 100 is given, 200 quantity is given, here 150 is given, right? Here is value, right? Here you will arrive at total value of the total value of inventory. right? Total value of the inventory. How do you arrive? Here, from this, lower of net realizable value and cost per unit, which is the lower one? Cost per unit is a lower one. So we are taking the 10 rupees as the cost here. This is the one we are taking, right? In the B, product number B, if you come, net realizable value is 11, whereas cost per unit is 12. Which is the lowest one? This is the net realizable value. So we are taking the net realizable value here. Net realizable. So here we are taking net realizable value is the lowest one. So we are taking that cost. For product C, right? Selling price is 11. Sorry, net realizable value is 11. Cost per unit is 6. Here cost per unit is lower. Cost per unit is the lower amount. So we are going to take the 6 rupees here. Okay. Understood? Now you can do the calculation. Now rest of the thing is normal mathematics, right? Up to this only you have to use your brain, right? How to arrive at a cost per unit from net realizable value and cost per unit. Once you thorough with the standard, it will be easy for you to do these sums. These sums are nothing for you. Okay, so for cost per unit, calculate it 110,000, right? This is 10,000, right? Here 11 into 200, 22,000. 22,000. Here 150 into 60, it is 90,000. Sorry, 9,000, right? 9,000, right? 9,000. 60 into 150, how much? 9,000. Sorry, 900, right? This is 900, not the 9,000. Okay, 900 rupees, right? 6 into 100, 600, 900. Now, total cost of the inventory is 32,900. 32,900. Total cost of the unit, total cost of the inventory is 32,900. Right? Understood? How do we arrive at this value? You know, now working is very clear. So, therefore, it is easy for you to go through and understand this. Okay. That is question number 2. Right, exercise number 2. Now we proceed to the question number 1, right? Question number 1. On 1st November 2023, company had 300 units of finished goods, right? 1st of November the company had 300 units of finished goods valued at 12 each, right? 12 each. During November, the following purchases took place, right? What is the, first of all, once you got the question paper to your hand, you had to go through what are the questions, right? From which subjects under the which lesson it is tested. If you select the inventory, then you have to select the inventory question, go through the inventory question. There, first of all, you once you got the paper, you have to see the what is the questions, the requirement in the question. They asking calculate the values of the closing stocks applying the following methods: FIFO and average cost. They want you to calculate this, the closing value of the inventory at the FIFO method, FIFO method and average cost method. So first of all, we go for the average cost method. Sorry, no, not for the average, FIFO, first in first out method, right? So here we will say date. Okay, here we will say date. Okay, can you see? This is date, right? And receiving. This is receiving. This is issuing. Receiving, in the receiving, we have to say quantity, quantity, and here is a price and amount, value, right? Value. So this is the dividing point. This is the dividing point. Okay, say next one, right? Quantity. What is the quantity? This is price and value. Price and value. Here we will say issuing. You see quantity, right? And price and value. Rather than saying price, we can say cost also. We can use the word of cost. Okay, right, right. Next column is balance, right? For the balance column, balance column. In the balance column, we will say quantity, quantity, price, value, right? This is how we used to prepare, right? This is quantity column for receiving balance end, and this is the value and this. So we have made a, we have drawn one chart, so it will be easy for us for the calculation. Sorry, right? So at the beginning, 1st of November, 1st, sorry, 1st of November, 1st of November, they purchase, they says balance brought forward, right? Balance brought forward, quantity, balance column. It has to come into the balance column, not into the purchases or receiving, right? This is the balance column, right? So in the balance column, 1st of November, they says 300 quantity was there. 300 quantity was there. At the rate of, what is the price? At the rate of 12, 12, right? 12 rupees value. So value 0, 0, 6, 3600. The value is 3600. I assume my calculation is correct, right? 12, 0, 0, 36, right? And 3600. That is the brought forward balance brought forward. Now you see they have given separately the day the transaction took place. You have to make it in order, right? They have given here and there, because first they are giving the purchases and second they are giving the sales details. So date wise you have to categorize it. Date wise you have to organize it, right? You have to say which transaction took place on earlier month, right? That is the 10th, I presume. 10th of November, 10th of November, they are making a purchases, right? What is the quantity? 400 purchases, right? 400 purchase at the rate of 1250, 1250. So what is the cost of 1250, right? That is 400, 400, we'll see 1250 to 40, 4800, right? 4800, value is 4800, right? So the so this value has to be transferred, because on 10th there is no sales took place, right? Next you have to extend this one to balance column. 400 at the rate of 1250, so 4800, right? So this is finished on 11th, 10th, okay? 10th is okay. So can we close this one? We have to close it like this way, then there won't be any confusions. So on the 14th, next transaction is 14th of November. 14th of November. What they says, this one 10th November we have taken, now we are in 14th November. So what they says is they did the sales of 500 units. 500 units they are selling, right? 500 units they are selling. Means you have to see how you can issue this 500 out of this balance of 700. First 300 at the rate of 12, right? Second 200 at the rate of 1250, right? So now the balance is 300. 300 quantity. At what price? 1250. 1250. Right? Then and there you have to make the entries. Otherwise, it will be difficult for you to identify from which where you have issued, because so many price categories were there. Right? So 12, it is completely issued this 300, and out of 400 we have issued sorry, 200 should be there balance, right? Out of 400 we have issued 200. Here we say 3600. Here we say 1250, that is 2375. 2300 2375. No, 2400. It comes to 2400. No, 2400. Right? Here balance also 2400. Right? So shall we close this one? Close this end. Date. Now next transaction take place in 20th November. 20th November we are purchasing 400 units at the rate of 14 rupees. 14. What is the cost? 14 into 400, 0, 0, 5600, right? 5600. So we have to take this one down. 200 units at the rate of 1250, that is 2400, and another 400 units at the rate of 14 rupees, that is 5600. Okay, there is no any other transaction took place on 20th, so we close this. Right, next one is 21st of November. 21st of November, what happens? Sales taking place, 400 units at the rate of 20. 400 units at the rate of 20. Rate is not problem for you with us, right? Selling price is just omit the selling price. 400 units is the sales. 200, we are taking the 200 units at the rate of 1250, and 200 units from 14 rupees. So 2400 here, and this is 2800. Right? Understood? We have to issue 400 units, right? 400 units. So here 200 units, first in first come, first out, first in first out, right? 200 came in, going out first at 1250. Next 200 we are taking from this 400, that is at the rate of 14 rupees. So the balance will be the 200 units at the rate of 14, that is also 2800 rupees. Right? Here nothing, here nothing. Right? Understood? So you are in safer way. Right? Now you finished. Now you have completed the 21st transaction. Next one is 25th of November. 25th of November. 25th of November, they are making another purchases 400 units at the rate of 15 rupees. 15 rupees. That means 0, 0, right? 6,000 rupees. That is 6,000 rupees. Purchase cost is 6,000. So here nothing, here nothing, here nothing, here nothing. So here in the closing stocks, you are bringing the 200 from up at the rate of 14. It is 2,800, and 400 current purchases, 400 units at the rate of 15 rupees, that is 6,000. Yeah. This is the closing stock size at 25th. So we will close that 25th. Here from this table you can get all the facts, right? 25th also we have made. Next one is 28th. 28th of November. We are selling 100 units. 100 units. That is, we are taking from 200 units, right? 100 units at the rate of 14 rupees. That means 1,400, right? So here you have 100 units at the rate of 14, 1,400, and 400 units, 400 units at the rate of 15 rupees, that is 6,000, right? This is the cost, this is the value. So total value of the stock is, here if you add these two, this is 7,400, 7,400. The total value of the inventory, right? 7,400 is the total value. Now first part of the question we have answered. First part of the question we have answered. We will do the weighted average method. Under the weighted average method, 1st of November, 1st of November, in the B, we are answering the part B for the weighted average method. 1st of November, there is a opening balance of 300 units, right? 300 units, okay, at the rate of 12, that is 3,600, okay, that is fine. Now we have to go for the another one. Let's see, 10th of November. 10th of November, we are purchasing 400 units at the rate of 12.50. 12.50, that is 5,000, right? Again on 14th of November we are selling. 14th of November we are selling. Before that we had to add this 400, 700 units would be the balance. 700 units with the 8,600. If you say 1 2 3 4, 8,600 divided by 700 cents, you will get the 1.12 rupees and 285 cents. 285 cents, right? Then 8,600 is the value. 8,600 is the value, right? Here no sales, no sales, sales. Here is the sales of for 500 units, no? 500 units sales at the rate of 12.20. 12.285, right? So 12.285, that means into 500 units, 6,142 is the value. 6,142. The balance value is 200, right? 200 into 200 units. It is 2,458. 2,458, right? This is 12.285. Again on 20th of November, 20th of November, they are purchasing 400 units at the rate of 14 rupees and 5,600, right? Then 2,458 plus 5,600 equal to 8,058. 8,058. How many units? 400 plus 600 units. Divide by 600. Then 13.43. 13.43. Right? Next, 21st, we are making another sales. 21st of November, we are making another 400 units sales. 400 units at the rate of 13.43 into 400 units, right? 5,372. 5,372. It is at the rate of 13.43. 43, right? And balance is 300 units. So sorry, 200 units. 200 units into 13.43. It is 2,886. 2,686. Right? 686. Then next one, 25th of November. 25th of November. 25th of November. They are purchasing another 400 units. Another 400 units into 15, that is 6,000. So balance is increasing 200 and 400, 600 units, right? 600 units. That is then plus 6,000, right? That is 8,000, 8,686. 8,866. That has to be divided by 600. 14.47. 14.47, right? This is also 13.43. 13.43, right? 14.47, right? 476, right? Another on 28th, they are making a sales of 100. On 28/11, they are making on sales 100 at the rate of 14.476 into 100. 1448, right? Here another 500 units will be there. 500 units will be there at the rate of 14.476. Then 8, it is minus 8686. It is equal to 7238. 7238. Right, this one is 7400. This is equal to 7400. 7000 to 238. Small difference will come. That's all. Small little difference is come. So we have made a average method. Under the average method, what we are doing is taking these two prices and taking the averages. Every purchases will have an average price, and there won't be any difficulty in finding the cost price, selling price or cost price, right? Here last cost price is 14.86. First, at the beginning the cost price is 12. Thereafter it came to 12.285. Thereafter 2.285, then 13.43, then 13.43, then 14.786, and at the last this is the average cost price. Here average cost price is at the rate of 14 rupees we have 100 units. At the cost prices at the rate of 14 rupees we had 100 units. At the rate of 15 rupees we had 400 units. Here is 14.426, that is a flat rate. Flat rate at that day 14.476, right? Okay, I hope that you would have understood this lesson, these exercises. So do more exercises. With this I am concluding my lectures today. Okay, thank you. See you in next class.